Habari ya leo, and that is Kiswahili, salamu ya habari leo, or how are you today? Let me welcome you to today's class. And because many people have looked at my YouTube channel, and I've realized people asking, Mwalimu Cleophas, can you try to simplify financial accounting the way you have simplified quantitative analysis, which is QA, and you have helped me to pass, or you have helped us in passing those papers and understanding quantitative analysis well. Can you help us to understand financial accounting the way you have also done it in auditing and assurance, and also in management accounting? So that is why I'm here today. That is why I've decided today I start financial accounting classes. And these are free financial accounting classes for now. And mark the word is for now. For now. I want to walk through some candidates through financial accounting, the basic knowledge in financial accounting. Maybe you did it to pass exam. Maybe you did it to just get to some levels. But do you have the knowledge? Having papers is one thing. Having knowledge is another thing, and most important thing. If you have papers without the confidence of explaining concepts in financial accounting or in accounting, then this is your class. It does not need you to it does not need you to do exam, yes, but knowledge is very powerful. You need to stand before people, explain to them what is accounting, what is an asset, what is a liability, what is shareholders' equity. Many people will explain rushing to cover the syllabus. For me, I want to walk you through slowly by slowly. Even if you are a CPAK, even if you are a holder of a PhD, even if you are a master's degree holder, do you have the knowledge? That is the most important bit. And I will not go outside the examination or the examining body in the country, Kenya. I want to go step by step, or the stepwise, using CASNEB past papers, trying to explain this accounting very, very well. So, what does it mean, financial accounting? Because I will do a past paper question, yes, but if somebody tells you or asks you to explain financial accounting, what will you have to tell? What will you say? It is this, or this is how you should frame your answer within these wordings. So you say, let me write to your financial accounting FA and say, this is the process of identifying, classifying, recording, summarizing, and communicating economic information. And communicating economic information for decision making. So financial or the accountants, they need to identify some transaction. Is it an asset? Is it a liability? So after identifying, they classify. So you identify this is a transaction. Yes, there's an invoice, maybe. Then classify. Is it an asset to us or is it a liability to the company? You need to classify. Do a recording in the books of accounts. Record there that particular transaction in the company's books of accounts. Then, those after doing the recording, you can generate a report using the systems. Currently, in most organizations, we use systems like the ERP, Enterprise Resource Planning System, like the Tally. We are using systems like QuickBooks. Others who are a bit behind, they are using what? Excel only. Excel needs to be complemented. You cannot work with Excel only. It will be better to be exporting your data to Excel from your system for better analysis. So you need, Excel is very key in an organization. But do you have a system where you can key in transaction, then generate a report? Because for example, you'll have to do the interlinking so that you can get the final report, and it is prone to errors because if you try to just touch any key in your desktop or laptop, it is very easy to do that without knowing, and tracing it can be a bit challenging. But having QuickBooks as one of the systems, then you export your report to other systems, to Excel, for analysis, then and for reporting. It is very important, or it is very, very okay. So you get a summary of whatever transactions you keyed in your system. Then that report you can give to maybe your seniors, maybe the directors, maybe the shareholders for decision making. So that's why you communicate that information for decision making. You communicate the information for decision making. So that is accounting. I saw a past paper question which I want to handle. CASNEB past paper question. This was August 2023. August. That's financial accounting CASNEB. So I'll be using the CASNEB past paper. So August 2023 question 5A. August 2023 question number 5A. And by the way, accounting is inevitable in whichever place. Even in our families, we need to account for money. If you are given some money by your father or by your spouse, it is important to account for the money given. When again you go to shop or to do a shopping in a supermarket, you need also to be accountable, and then that's why you're given an invoice or a receipt to account for each and every item you purchased. It is supporting the use of the money. Where we work also, accounting is inevitable. You need to know whatever, if you're in a selling industry where you're selling, or you're in an industry where you're manufacturing and then you're selling, so you need to know the total revenues you have obtained from within a particular time. You less the expenses incurred or the cost incurred, then you can know the profit of that particular company so that we can make a decision. Are we going to pump in more money? Are we going to expand the business? Are we going to do we need more expertise to run particular department which is a bit behind, or which is giving the company or making the company not to achieve the objectives optimally? So that is after you give your report, after the company's financial statements are generated, then the investors can have the report and make some decisions on whether to maybe pump in more money, on whether to have dividends, and so on and so forth. So let's look at this past paper. I'll use a soft copy past paper. I'll use a soft copy paste paper. It says, explain the nature of the accounting equation. Explain the nature of the accounting equation. This is a 4 marks question. It is 4 marks. Explain the nature of the accounting equation. Many people don't know the accounting equation. So what does it provide? So when explaining, say, this is a fundamental. This is a fundamental accounting principle. Fundamental accounting principle, which states or provides that total assets is equal to the sum SUM of additional to the total of total liabilities and shareholders' equity. And this is what we call the capital. Sorry, so that is what it states. It is expressed. This is expressed. You're answering an exam. Expressed as follows because of the CPA students. As total assets is equals to the total liabilities plus shareholders' equity. Which we call the capital. Okay, so it's very, very important to know this is the very key question. So what is shareholders' equity, let me start. What is total assets, or what do you mean by an asset? An asset is a resource, so you can be asked, I think I'll not write that. So if you're asked to tell an asset, you say, an asset is a resource, or assets are resources which are owned, or they belong to the company, owned by the company, and they have some economic value, and they can provide future benefits. I've said assets, they are resources owned by an entity, and they have some economic value and can provide future benefits, e.g., land and building, machinery, inventory or the stock, cash. All those are what? Assets. Somebody will ask, Mwalimu, I don't know what is a liability. Here we are. So already I've explained. I've said I always need, or I love explaining whatever I've just brought on board very well or thoroughly for you not to have some questions when you're left. So I've already explained assets. So what are liabilities? So liabilities are obligations. So when you ask about liabilities, you say these are obligations that the company owes to outside parties. Liabilities are obligations that an entity or a company owes to outside parties. So they represent the debts. They represent the debts, and maybe some can say they represent the debts and financial responsibilities which the company has, such as loans, mortgages, accounts, payables, etc. So those are liabilities, obligations that the company owes to outside parties. You can give examples like loans, mortgages, accounts payables. That's what I've said. Now, Mwalimu, you have enabled us to understand what we mean by liabilities. I want, Mwalimu, you help us to understand what? Capital or shareholders' equity. Now, from the equation, if you make the capital or the shareholders' equity subject of this equation, it shall be capital is equals to, so if capital is left on one side, then liabilities comes on this side, it will come on this side where you have the total assets or the assets. Then here it is positive, it changes the side to be negative, the total liabilities. So what does it mean? Capital is equal to total assets minus the total liabilities. And that is where we get the meaning of capital. You say it represents the owner's claim. I repeat, capital represents the owner's claim. What owners can claim on the assets? So owners claim on the assets of the company. I say capital represents this capital be the owner's claims on these assets of a company after deducting the total liabilities. And that is how you define it. As simple as that. Say this represents the owner's claim on the assets of the company after all liabilities have been deducted. After all liabilities have been deducted. So it includes things like the common stock, retained earnings, etc. So exactly, that is a question which was giving somebody 4 marks. Now, I want to be walking you through financial accounting concepts slowly by slowly. And ensure always you share the link, ensure you subscribe to this channel. It is the channel for accountants. I want to instill the accounting knowledge to my people. Those who know, being their tutor for several years, they know how we do it. Thank you for watching these short concepts. Going forward, more is coming. Keep tuned. Thank you.